So what is a planned sell-off and why is it happening? What are the other possibilities it might trigger? But more importantly, how will it affect your Tesla stock? I'll answer those questions and more for you right now. Welcome back, everyone. In this video, we will cover why the big sell-off, 3 possibilities that will come from this, how each possibility will affect Tesla stock, and I'll let you know what I think will happen, in my opinion, and what I am doing with my Tesla stock. So I got big news coming to Patreon later this week, in addition to getting direct access to me and my trades. Link in the description if interested, along with a link to my Instagram where I accidentally heart inappropriate things and I've not been drinking. So give the video a thumbs up if you've ever done that before. Come on. Be honest. Now let's dive into what is going on with this sell-off. So why the big sell-off? The explanation is actually pretty simple, and it happens every quarter. But there were some extraordinary, once-in-a-lifetime events that happened at the end of last quarter and during this quarter that has set up this weird scenario. So at the end of each quarter, large pension funds, like trillions of dollars worth of money, and other large institutional players rebalance their portfolios to keep their ratios in line with whatever the rules of the fund are. So for example, if the fund is supposed to have 50% bonds and 50% stocks, each quarter they look at where the funds are in terms of value and readjust it to get it back to 50% bonds and 50% stocks. So if stocks go on a big run and the portfolio now sits at 55% stocks and 45% bonds, then the managers would look to sell some stocks so they can buy some bonds and, rebalance the portfolio. What made this quarter so exceptional and kind of creating this once in a really lifetime or once in a every blue moon scenario is you had a ton of crazy things happen in an incredible short amount of time. I mean, like records set everywhere. So at the end of last quarter, you had the market drop from like 29,000, or if you want to use the NASDAQ, over 10,000, all the way down to 20,000 for the Dow and 7,000 for the NASDAQ at the end of the quarter. So most of the fund's stock value went way down, meaning they need to sell some bonds to buy stocks to help rebalance because the stocks lost so much value. So now they own a lot more stocks. But wait, here's where it gets really messed up. What happened to the bond market this quarter? It got crushed because the Fed lowered rates to 0 and just started buying everything. In the meantime, stocks go on a 3-month run no one has ever seen before. I mean, like, it's mega frothy. So now when you look at something like the NASDAQ, it's back up over 10K and has gone up over 40% in that quarter. So you have monster gains in stocks, I mean like over 40% gains, and then you have huge declines in bond value. So that sets it up to where possibly instead of the, 1%, 2%, 3% rebalancing that needs to happen, you could have some massive rebalancing, which means massive amounts of selling pressure given pension funds make up trillions of dollars. So that's exactly what all this fuss is about, and no, this is not normal at all. That is why you didn't hear a thing about it last quarter, because it's typically a non-event. It's just a small little blip on the radar. So with an unprecedented run of the stock market and the bond market essentially being crushed by the Fed, you have this really weird circumstance that just normally doesn't happen. So what are the 3 possibilities that could come from this? So I think there are 3 possibilities that could come from this. Maybe I should rephrase that and say there are 3 things I think will happen because of all this. Number 1, you will see everyone crushing the like button for the YouTube algorithm. Hey, it's possible along with me getting a date. Jeez, you guys are tough today. The real number 1 this time, you will see some profit taking from other large investors, and I think we're already seeing this. After such a terrible quarter last quarter, a lot of these guys are looking to make gains so they can show their investors that it's a great quarter and they're not just bad managers. Remember, you would trade differently for a fund than you would as an individual. They have investors to answer to and bonuses to get paid. So that's completely different than you and I. But I do think you are seeing and will continue to see some profit taking over the next few days. And number 2, which I shouldn't have a reason to chuckle about, you will see panic selling from retail investors, especially new retail investors. The good news is if you are subscribed to me, That won't happen to you. My subscribers are far too smart for that, so if you want to be smart, you should consider subscribing too. Now, for those of you that don't know, retail investors are you and I, us. And for the most part, the retail investor has gotten away with making some of the most ridiculously risky trades ever. But this is probably the first time many of those will experience selling pressure and drops, and many will panic. And then FOMO and buy and panic again, causing great volatility. The retail investor's least volatile stock is probably Tesla, which is saying something given its volatility. But they are involved in the Hertzes and the Nikolas and the Spotifys and a variety of other speculative stocks like that in general. So their drops will be more drastic, which will really scare the retail investor who hasn't experienced this and is probably in riskier assets than most of those funds out there. And we won't even discuss the panic if they have options out there as well. Just not gonna go there. And number 3 is the worst case doomsday scenario. So that would be these portfolios rebalancing is much larger than expected. Retail investors freak out equally as large, which triggers options and stop losses and other kinds of stuff like that to go off, which causes other investors to assume the game is over with this ridiculously overvalued market, so they sell, and before you know it, it's a runaway train down again. I'll link the videos I made about the crash coming and what to do if it happens at the end of this video, so hang tight, it will just pop up on the screen there at the end. You really do need to know that information, or at least be aware of the possibilities. This is kind of a worst case scenario here, but it is possible, and let me tell you why real quick. The market has priced in a perfect recovery, and as you can see already, the 2 states out front on their reopenings in this recovery, Texas and Florida, have paused their reopenings for now. They're doing this because of the rise in illness infections spiking again. And now you have states banning other travelers from other states. So this isn't good at all. All this has a lot of investors nervous. If the Dow was sitting at 20K right now, this probably isn't that big of a deal as it would already be beaten down. So it would fall a little, but it just wouldn't be dramatic. But at 25,000, it has a lot of room to fall because it is priced in a perfect recovery. How each of these possibilities will affect Tesla stock. Now remember, this is my opinion only and for entertainment purposes only. Do not listen to me. So let's run through each scenario and how it will affect Tesla stock. So in scenario number 1, large investors take profits. I think in this scenario we see a short-term dip. Maybe Tesla gets into the 800s even. I mean, we are just sitting at 959 right now, so it's not out of the realm of possibility Tesla loses another 60 points, but it's profit taking and part of the ebb and flow of a growth stock. I know you guys get used to 10% gains every week, but this is where I think Tesla goes if larger investors start to take some profits off the table. Scenario number 2, panicked retail investors. So I actually think this one may hurt a little more and will create more of a roller coaster effect. Kind of looks like I can dance, doesn't it? Yeah. Ooh. In this scenario, you would see intense selling pressure for a few days and then intense buying pressure for a few days, and it kind of goes back and forth like the ups and downs of a roller coaster. If the chat rooms and Robinhood's own data is any indication of how the retail investors will trade, not my Cool Kids subscribers who are 7,000 strong, but you know, the other guys, the selling and options unwinding will be intense down, and then the hype train will start and everyone will have FOMO in that same group and buy, and the pattern just kind of repeats itself. Unfortunately, there are a lot of retail investors in Tesla, so it will suffer more swings than say the Amazon or something like that. Having said that, it won't be crazy like it will with Nikola, and we're not even going to talk about Hertz. So I could see Tesla going into the 800s, maybe even drop just below 800 for a period of time until everyone settles down and all the options stabilize and all that good stuff. Scenario number 3, the Doomsday scenario. Well, we saw this show in March. Tesla went from 900 all the way down into the 300s. And please don't start with the
Tesla is better than everyone and you will never dip that low again.
If the market corrects hard, Tesla will correct harder. That's just a fact. On the flip side, you have almost tripled your money from the March lows if you bought then, so you stand to gain more on the backside. And that's part of a great growth stock. So look at this scenario as a massive opportunity to buy Tesla stock, and don't view it so bad. It's an incredible opportunity. What I think will happen in my opinion, and what I am doing with my Tesla stock. I think we are actually going to see both number 1, investors taking profits, And number 2, retail investors panic selling, but slow down, slow down. But it will be a very mild version of both. So some investors taking some profits and some retail investors panic selling, but not as much as there would be and not enough to trigger a giant collapse. At least not yet. If this reopening continues to go poorly or states start to turn off the economies again, look out. And the videos that will pop up at the end explain exactly what will happen in that scenario. But let's not go there yet. So that puts Tesla somewhere in the 800s to me if it plays out this way. But what am I going to do? Well, according to the comments section, I already sold my Tesla shares and I'm just trying to manipulate Tesla so I can buy more because I cannot afford it at $1,000 per share. Clearly these guys do not watch my videos and have no clue how the market actually works. I cannot move the market at all, although that would be way cool and I would be way richer. And then I guess I would also be in jail. And I have not sold any of my shares of Tesla, and I do not plan to sell any of my shares in any scenario I just gave you, even a total collapse. Now, if Tesla gets into the 700s, I will add a few more shares, and if it stays high and doesn't get into the 700s, I'm happy right where I'm at for now. And if the stock apocalypse comes again, then I will consider deploying a much larger amount of money towards Tesla stock. So consider joining my Patreon if you want to see those trades in real time and to get direct access to me, which you cannot do anywhere else, and if you want to see what that neat cool stuff is later on in the week. And the easiest way to show your support for the channel is just liking the video. But I think it's going to be a crazy next few days, so make sure you are subscribed, which you can do right there, so you can get the truth on the craziness. And follow me on Instagram if you want to see me fail at that as well. And here are the videos I promised about the crash I see coming. Thanks.